In this video, I will be sharing a very special trick that will help you become a better trader. Now, it involves looking at order flow, so the COT data, what hedge funds are actually doing on a specific pair or a specific currency. Now, why are you supposed to be looking at these tables? Because by looking at what hedge funds are doing in the long term, you can definitely position yourself with your swing trades for a better risk to reward and better probability of the market actually moving in your direction. But you can't just look at the data. You always have to know in which way you can relate what you're looking at on the actual charts, on the order flow charts, to what is going on from a price action perspective. And in this video, that is exactly what we will be speaking about, a special trick that you can use so that when this happens from an order flow perspective and what I will be showing you from a price action perspective, they both happen, you will have a very high probability trade, and that is exactly what we will be sharing today. There is a situation, basically a lesson that I want to speak about in this video, and it regards the moment in which you see a pair that is moving in a direction, but you see the orders of hedge funds basically pointing in the opposite direction, or better said, you see a pair moving to the upside and, for example, you see longs getting closed, okay? Or the same thing to the downside. So you see a pair that is moving to the downside and you see shorts getting closed. Now, this is a very, very important moment in the market. Most people don't even look at the order flow, but if you are monitoring the order flow, then this kind of situation will have happened to you, and you will have probably noticed that the best risk to reward opportunities come exactly in these kind of situations. So that is why basically in this video I wanted to speak about this specific situation in the market. Now, here on AUD USD, for example, right? A couple of days ago, I made an analysis on TradingView, breaking down AUD USD for you guys and showing you that definitely we did expect the market from here to show a reaction to the zone and to start a push to the downside, right? There are many reasons for which we wanted to see the market shift away from this area. One of them is that clearly we had some previous support to resistance at this area that was lining up perfectly with the completion zone of this W formation. By definition, when you have a W formation, what do you expect? You expect the market to complete at the neckline. So basically the market to make a retracement back to the previous resistance that will be then turned support, right? Previous resistance turned support, aka the neckline of the W formation. And that is exactly what we expected here, right? We expected the market to make a push to the neckline, or better said, we expected the market to start a push to the neckline, because sometimes the market will not really complete the W formation, meaning that it will not really make it all the way to the neckline. But anyway, what is the important thing? The important thing is that the market starts the push to the downside. Why? Because if on lower time frames, okay, so on the 4-hour time frame, you will find a good entry inside of this area. After the push to the downside starts, what you will be doing? You will be risk free on the position, so you won't have open risk on the trade. So because as you know, when it comes to swing trading, okay, what is the best way to approach it? Taking the direction from the monthly, weekly and daily time frame, and then going for the entry from a 4-hour perspective. So what we had here, okay, during this push to the upside, when we go and see what was the situation from an order flow perspective, so what hedge funds were doing during this push to the upside, what we can see that during the push up, they were actually closing out their long positions, okay? So during this push to the upside, they were actually reporting that they were closing out their long positions, okay? So closing the longs during a push to the upside. Now, if you want to bring price higher, what would you be doing? You would obviously be opening more longs, right? Not closing them. So if you're closing them, what does it mean? It means that you want to add more shorts from a better price to build up basically a nice push to the downside. In fact, what we can see, plus 2.7k shorts and plus 2.9k short positions. So more shorts added basically on this pair, which obviously did impact the net positions, which we're getting obviously more negative, from 28k to minus 35k. Just a quick reminder, make sure you comment below and you let me know which topic you would like to cover in the next video. So overall, this is definitely a situation in which you did expect this push to the downside. And that is why I told to all of you on TradingView, on the completion of the W formation, definitely expect a push to the downside. I will link also the analysis in the description. So this was just a quick lesson to give to you guys when it comes to closing the position. Anytime that you see the market moving to the upside and you see hedge funds closing their longs, be ready, if obviously you have also other confluence factors, to be looking for a possible short position from a 4-hour perspective. And the same thing, basically if you have a push to the downside and hedge funds are closing their short positions, then be ready because they probably will be buying from lower. If you remember, we had seen that also on a Euro USD. Basically, we had seen the exact same situation from a Euro USD perspective. What did we see? We had basically seen a market that had made a very big push to the downside. We already spoke about it, right? Huge push to the downside, and during this push to the downside, what they were doing, they were closing out all their short positions. So during the push to the downside, closing their short positions, what do you expect next? You expect them to load up some long positions and make a big push to the upside. This was a beautiful opportunity here on Euro USD for this push to the upside specifically. Obviously, if you did find an entry on lower time frames, because if you don't find an entry on lower time frames, you can't take the trade. But if you did find one that was following the rules of your strategy, then definitely there was a very good opportunity. And with this push to the downside, what did they do? They manipulated all people that were looking at the break of this zone. Everybody was saying, okay, they broke below this area, let's start shorting. Big mistake, because they will use your liquidity to actually build up long positions and start another push to the upside, taking out your stops and basically moving the price where they want. So it's a very, very clear way that they do it. You will see them close out their, for example, during this push to the upside, if you see them closing their longs, then definitely be ready for a possible short position. So just something that I wanted to share here in this video. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education for all of you, as well as going and checking out the mentorship program. You find the link in the description. It's a very complete program. First, you learn all the rules of my strategies, and then you trade them with me. Each and every day, I give you a new daily market breakdown showing you exactly how you're supposed to be applying the strategy with entry, stop, take profit, as well as answering every question that you have each and every day. So it's a very complete program, and I suggest you to go and check it out in the link in the description, and I will see you in the next video.